Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Taking a look at the Euro Kiwi, I want to show you the strategy. We've got a 14 trade look back with one losing trade, so 13 out of 14. Some of these charts you want to watch out. Have a look and see how this is manipulated. Look at these moves here. All right, these are designed to take you out. And I think you probably want to look for pairs that aren't so volatile, Euro Kiwi. Anyway, 13 out of 14 winners. It doesn't matter if there's an occasional loser here and there. Obviously not. Now, you can increase the probability factor with this. And let me show you how, and then I'll go into the strategy. Let's have a look at this two chart layout. See how the 30 is trading up? Once you see it moving north, you're looking for bullish opportunities, only bullish opportunities after this point on the 3 minutes. So there's our point of interest. We only go for bullish opportunities. So we eliminate any shorts, right? They're not included. Not included. That was our one losing trade. There you go. Okay, so now we're trading with the trend, and that changes everything. Look at these winning trades, and we're not taking these shorts, right? We're looking for, there you go, there's a trade right here. Now, we're looking for, let me just get rid of that because that's out of the question. I'm just going to explain this. We want a bullish trend on the higher time frame, and what you get quite often is this, and this is exactly what we're going to be trading. You get a ranging market, and the overall trend is bullish. Now, smart money obviously want to trade it in this direction. Before they can take the market up, they have to tap into sell-side liquidity. If their intention is to go in this direction, the market will dip down into liquidity, and then you get your trade. What we're looking for is the opportunity here when it dips down. So what's going to happen is you're going to get a red dot followed by a green dot. That's your cue. The green dot is telling you that this is overextended, and you can see it. That's your trade. Absolutely, that's your trade. Now, I did a couple of videos. I did one on gold, I did one on the pound dollar, and I really want to just take this to the next level and eliminate trades that go against the trend on the higher time frame. Basically, this way the outcome is very different. Well, I mean, we had a 13 out of 14 win rate anyway. We can change that and really enjoy the ride here. So what we're looking for is this. We're looking for the volatility. I'm going to explain it right here now, the strategy. We need the volatility, and the higher time frame is telling us that it's bullish. We want to see, prior to the move, we want to see a move up and then a move down. And then that's going to be the opportunity. And I mean, look at the outcome. So we set these dots, they go off. We're looking for a combo of the dot and the green triangle, and we take it on the first retrace. Generally, I like to mark up, and this is how I like to enter these. See this candle here, thin leg, strong push, right? Let's just pick up the candle left, the high, the candle right, low, pull that across, price gap. Sometimes you're going to miss a trade because it doesn't pull right down into this. But see this candle here? That's your entry. So what you can do is you can layer in your buy orders right at this level here. And, if you want to layer them down back through the price gap, it's up to you. Or you can just set up your entry just slightly in from the high. So what we're looking at, I'll just go into this a bit closer. This is important. See this candle here? Okay, look at the candle left, the high, the candle right, the low, and then we pull that through, that range. And I generally will set up my buy order about a third of the way in. That's the range. I'll probably go about there, and I mean, that's exactly how we got a fill in this case. Stop loss, we've got the dots. Under the dots, previous low, and that's it. I think you're going to find if you combine that with, just look at the trend on the 30, and you can include the 4 hour if you like, but this has been our strategy. The only difference is we're going to go with these dots because we want this volatility prior to the move, and the volatility being a stop run basically. We want to get in when smart money gets in. Okay, so we're looking for buy opportunities, bullish trend. All right, so what we'll do now, we'll get specific about how to enter and managing this trade. But this is really important. This is the difference between a winning and a losing trader. I can show you this if you like. This is a fib extension tool. What I've done is I've set up these levels in here. 0 and then -1. And then 1, 2, 3, 4, blah, 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 blah. And I've got 0.08. Take a screenshot. Enter. And go for T1 at 0.8, not 0.08. That's target 1. And you take 70% off, or 65-35 if you want. So 70-30 or 65-35% of your position. What I'm about to share with you here is something that caused me to blow an account. Trust me. What you do in here will either make or break you as a trader. You need to trade with consistent position sizes, and it has to be a percentage of your account. If you trade this with a whole bunch of different lot sizes, risking $500 on one trade, $100 on another trade, you know what I mean? If you mix it up like that, you fail to manage your trade basically, and that is a direct beeline for disaster. I've been there, guys. I've done it. I've done that too many times in the early days. Painful, expensive lessons. Percentage of your account, so that no matter what instrument you're trading, no matter what the distance is in terms of this risk range, stop loss could be down here, it could be tight, doesn't matter. Keep the percentage of your risk the same across the board, and then close 70% of your trade, leave 30 to run. Now when you close 70% at this level, that is in the money. It's profitable. You're ahead. So you can leave your stop loss where it is, let it gain a bit of traction, and then start to move it up. But give it a bit of time and room to breathe. I mean, this can come back all the way back down in here. So once you're well and truly, on your way up, okay, then you can move your stop loss up, and you can use these dots. You can follow it up. This is why we have these indicators to set your stop loss midway up through the cloud, if you like, all the way. This is a 3-minute chart. Right? You can do that on a 3 or a 5-minute, and then you close when you trade back into the cloud up here. Okay, to wrap up, you want the combo of the dot and triangle break 1, along with, and you want to see these guys as well, these lines here. These are divergence lines. You have a combo of these 3, then you're waiting for a pullback, retest of the range. This one actually took off, and we still have a price gap sitting back here. It didn't trade back down into that gap. Okay, so sometimes you might miss it. This one here, it traded back down into this gap. I prefer the pullback down into the gap, but you will miss a couple here and there. Or you can just go with retest of the range, previous range. Well, there it is, and you would have been in. If that was the case, there's your range there, and you're in. It doesn't really matter, but I like to try and get a bit more of a discount, and I want to see it pull back a bit further. But then you miss out on some opportunities. So you'll work it out. So guys, gain access to the indicators, and not only that, our Discord group, VIP, from $10.95 per month. Okay, the pricing has changed. Here's VIP from $10.95 a month. Nothing else like this anywhere. Okay, there's other options here, and lifetime is discounted at the moment. Okay, with that, safe trading, and look forward to seeing you in Discord.